Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update this morning about the economy and the investment markets so you can better understand not only what we see but how we're positioned within our client managed accounts. We continue to see deterioration in the U.S. economy, slowdowns, especially at the beginning of this earnings season. A couple notable earning downgrades and really fall offs, I'm going to call it, was Cummins Engine. Cummins is one of the biggest and really the best of breed manufacturer of heavy duty truck diesel engines, not only here in the U.S. but around the globe. They basically missed expectations not only on sales but earnings, which is somewhat troublesome. But the big thing is they're looking at the future and they're looking at reduced expectations in 2013. This tells me that we are definitely seeing a global slowdown. Now that's only one company. We've seen at least 2 other dozen companies in the last week or so that have pre-announced earnings warnings or have actually announced earnings warnings, meaning things are slowing. That's what they're saying. Over in Europe, we're definitely seeing a major recession. In the emerging market economies, China, India, Brazil, all have slowing economies substantially. We've had China actually cut rates twice in a month, which they haven't done. I can't actually remember when. It's got to be, 10, 15 years. So what this basically tells me is they're concerned about their economy slowing too fast. Not that I anticipate them at all having negative GDP, but definitely maybe below that 7.5% GDP range that they really want to support. In this country, obviously, earnings have been ratcheted down by a number of firms. We're also seeing the Federal Reserve statement that came out yesterday that basically is really telling you, hey, things are slowing. They are somewhat concerned. There was talk about QE3 or quantitative easing. In my opinion, quantitative easing didn't work the first 2 times. It's not going to work this time. It's kind of propped up the market a little bit, but it really hasn't done anything to add jobs or grow the economy. If they do QE3, I think at best you might get a pop in the market, but ultimately we're getting a little bit of a slowdown. Now within our client managed accounts, our global tactical opportunity portfolios across the board, we work on what's called relative strength. And equities, which are your biggest risk asset, equities like in the United States or the emerging market economies, typically are the assets that have the best opportunity to go up in value, and they also have the biggest risk on the downside when you go into recession. Historically, we have a recession about every 6 to 7 years. The last recession we had was 2008. Recessions can come faster. In a recession, the typical stock market decline, if measured by the S&P, is about 31%. If you look at worldwide, it's better than 40%. The last 2 recessions, we had 50% declines in the stock market. What's basically happened within our portfolio starting 3 months ago, relatively weaker economies or stock markets like China and the emerging markets, we started selling those off 3 months ago. Now we lagged a little bit in our portfolio because of that, but what we're starting to see now is the changes we made then, because they were getting relatively weaker, it kept us out of really harm's way on a bigger decline. And actually what we're seeing now is actually nice increases in all of our client portfolios year to date. So even though it may lag a little bit, what we're finding is the areas that we are currently in, which are much more conservative than equities, like the U.S. Treasury. In fact, I've talked about treasuries. I'm not a big fan of long-term bonds on a long-term hold, but our global tactical will put those in the portfolio, and it could be for a month, 2 months, or 6 months. Certainly, we're not going to hold these positions for 20 years, but what's happening is interest rates further are going down. I predict the 10-year bond, which is about 1.5% today, within the next 6 months will be somewhere around 1%. China's 10-year treasury has been at 1% for a number of years. I think ours is going to be there. I think the euro is going to continue to come down. In fact, I think the euro will come down from about 122 down to parity, actually dollar-wise. And I think ultimately what's going to happen is our dollar will stay strong, maybe get a little bit stronger, which actually doesn't necessarily help our economy that much. A weaker dollar is better for exports, stronger dollar, a little bit more cumbersome. So at the end of the day, we are very conservative in our portfolio allocation. We are doing well year to date. In fact, we're off to a great start for the quarter for this half of the year. Occasionally, even our strategy will lag just a little bit, so I want to stress that. But what it's designed to do is not only provide the upside, but it's there to provide substantial risk measures in a severe down market. Since we're not in equities at this point, and we've got a very conservative balance in our portfolio, we are now hoping that, yes, I hope we go into a mild recession. I hope the stock market actually sells off. So when relatively they bottom out and they get relatively strong, we can start adding those back into our portfolio. Just to kind of give you a little bit of an idea of our strategy. So again, doing well year to date, off to a great start on the second half of the year. In fact, the market's down about 1.5%. Most of our global tacticals are up. Our portfolios are up around 1.25 to 1.5, so that's a 3% spread on the upside. I anticipate some volatility continuing in the market, and I would anticipate further downside. Now, the ECRI, Economic Cycle Research Institute, beginning or end of last year, 2011, predicted a recession sometime mid-year. They actually came out and reaffirmed that they believe we're already in a recession, although we won't get the numbers from the government for at least 2 or 3 months. I think we're also in a recession. That's cumbersome, and that's going to have an impact on the economy, obviously, and portfolios. We're conservative, but if you have questions about your portfolio, make sure you call our office if you have any questions. And, of course, we appreciate your business and your referrals. Have a great week and a safe one.